Hey, everybody. Welcome to Friday. It is Friday, January 13th. Hope you had a great week and looking forward to the weekend. Today is the day. Today is the day that earnings really start to roll in. We've got the financials coming in today. We'll talk about that and more when Dave joins us here in just a few moments. Before we do that, though, let's not forget the first thing we talk about the show. Where's your risk? Do you know what it is? You need to give us a call, 863-382-0037. Let's walk through our core retirement design. Hey, Dave's coming up next. We'll talk about the financials.
5.7 Highlands Light FM. That's calling. I'm Morning Dave. It's 8:40 now, 20 before 9. We've had a couple of relatively quiet days news-wise on Wall Street this week. Not a lot of quietude as far as the market activity is concerned. We all make up the difference today because earnings season starts in earnest. Let's head downtown, see what Phillip Statler from Statler Financial Services is thinking this morning. Phillip, good morning. How are you?
Good morning, Dave. How you doing? Well, it is Friday, and it's hard to believe, Dave. We are halfway through the first month of 2023.
Oh, you had to remind me of that, didn't you?
Time flies, man. Time flies.
Absolutely. Yesterday wasn't half bad. Dow was up 217 points. NASDAQ was up by 69, and the Standard & Poor's was up by 13.5. But then we got to the macro information this morning, even before the actual stock issues reporting come up. And all of these bits of good news, inflation leveling off, starting to get a little bit better. Maybe we can look at 3% as being a compromise number and have the Fed settle for that on inflation. Maybe we'll do 0.25%. Yada, yada, yada. And then we get the import price index in this morning. The expected import price is to drop by 0.9%, and we ended up going up by 0.4%. And the same doggone thing happened to the core. Just what we needed, a chink in the armor for the inflation war, right?
Yeah, it really wasn't what we needed, Dave. I was looking at the numbers thinking, okay, if it can hit expectations, then that's really a good thing heading in the right direction. But man, that was the exact opposite of what anybody seemed to expect. And so I'm sure that's what's putting some pressure on our futures this morning.
And they're not looking very pretty early on, and I've got the delayed quotes, so you're probably going to have even more interesting numbers. We're kind of into that mode where do what you say you're going to do is kind of the mantra out there. I mean, you don't want to overachieve inflation or they get scared about a recession. You don't want to overachieve a price decrease or you're going to also give them fears. But at the same time, when it goes completely the opposite direction, that makes us all worried that inflation is going to rear its ugly head and stay with us, and the Fed's going to be tempted to really kick us where it hurts with an interest rate increase next month.
Oh, that's right. And so, we were hopeful. We were hopeful that the numbers would indicate that we could get a little bit of a reprieve on the increase in interest rates. But, it's such a mixed bag that I think they're going to sit down there and start flipping coins.
I've got to believe about the same darn thing. Other tidbits out this morning that do give us some indication of a softening employment market. Carvana, we've talked about them a lot. They've been in some real trouble of lately. They announced big staff cuts overnight last night. Lending Club, one of the big clearance houses for mortgages and other lending activity, announced they were cutting 14% of their staff. That does tend to indicate that things are looking a little bit more quiet in the mortgage market, doesn't it?
It really does. And it's actually, let's face it, it's really expected. And it's probably a little later than what some people expected, given the slowdown we saw in 2022. But you got to realize that there's less and less folks that are going to be applying for mortgages. The refi market has pretty much got to be closed down unless you're just desperate for some money. So that whole industry has got to be slowing down, Dave.
Yeah, I was going to say refining right now, most of us have gotten at the very least in the 3-4% range as far as mortgages. So pulling equity out of the home and refinancing at 6.5%, 6.75%, 7% just does not look inviting at all. Other stuff going on before we get to the actual earnings, and this was more the funny side than anything else. Tim Cook has agreed to a massive pay cut at Apple. He made $100 million last year. He thinks that's way too much and wants a pay cut. Before we went on the air, I said he must have seen what Joe Biden wants to do to his income taxes, right?
Exactly. Yeah. Hey, but did he say how big of a pay cut he was wanting to take?
Don't have that number. Let's see. I saw the headline. I was having enough fun with the headline. Let me see if I can find it. While I do that, we've got a whole pile of earnings to kick off earnings season, and probably are leading the bunch because a whole lot of financials there. But we have one outlier industry, and it's kind of a bellwether. Delta Airlines had kind of a mixed bag. I gather they did well, but they're kind of seeing a crummy 23 ahead, huh?
Well, they are. They came out. They reported their fourth quarter, and their profit and revenue beat expectations. Which means the fourth quarter last year we were all traveling. Let's face it. You remember Christmas time and all the delays and the cancellations because of weather. And so they had a good fourth quarter. They beat by almost about 15 cents a share. They came in at $1.48. But they look at some headwinds coming up in 2023, and their current forecast for the current quarter and the current year is not quite what analysts had expected. So they're actually trading down this morning over 5%, like a little over 5.25% right now, Dave. And so that's not good news.
No, that's a big drop. That certainly indicates that this earnings season guidance is going to count even more than it normally does, and it's always heavy otherwise. By the way, I looked it up. Tim Cook has agreed to a $49 million compensation package for this year instead of the $100 million he got last year. I guess the poor boy's going to have to eat at In-N-Out Burgers a little bit more.
I tell you, man,
it's a tough life.
Shame. Yeah, it is a shame.
On to stuff that really matters. We got a whole bunch of banks reporting, and if you like Delta, you're going to love the banking industry because they're saying almost the same thing, aren't they?
Yeah, most of them really are. Let's start out with the big name, JP Morgan. And they did beat on fourth quarter earnings and revenue. But I like his quote here. Jamie Dimon, he's always good for a quote. Said that a mild recession is now, quote, central case. I'm not sure what central case really means, but I guess that's the common thinking in that industry now. So they are actually trading down today about 2.6%. JP Morgan, Jamie Dimon also said, we've got a lot of unknown headwinds coming our way in the current year. So a couple quotes from him and gives you kind of some indication of what that industry is thinking that this year is going to deliver to them.
I'm actually kind of thinking that somebody with the smarts and with the research base that Diamond does, saying it's going to be a mild recession, I'm considering that backhanded good news. I mean, the fear that we've all had is that the Fed will overachieve on its interest rates and send us into another Volcker recession like we had in the Reagan years, and nobody wants to see that. I'm actually taking that as good news.
Yeah. If he's on target, that's definitely good news from that standpoint, because let's face it, a light or small recession would be better than a heavy-handed one that we all are kind of anticipating. The other one that were reported was all the banks pretty much did, but Citigroup reported, and they reported a 21% decline in their fourth quarter profit. Yeah, so they not real good for them. They still made money, but not nearly as fast and as furious as they were. And so they're actually trading. They're one of the few. I don't know why. I didn't see it anywhere in their numbers, but they're actually trading in the green this morning, about 0.75%.
Well, I wonder if that big decrease is an increase in credit card bad debt allowances.
It could be. Obviously, it takes a little while to go through all the report and figure that stuff out. But
it would take it would explain the green ink on it, even though it wasn't a great report.
Exactly, it really would. And the other one we have is Wells Fargo. Obviously, they've been in the news lately with their issue having to settle some lawsuits and some regulatory issues. They're seeing shrinking profits down, and so they're trading down about 4.3% this morning. And that's kind of been the theme in all of the banking industries. The other one that I've got on my tip sheet is Bank of America. Bank of America, they beat on earnings, beat on profits. They came in 85 cents a share versus 77 cents that was expected. But again, interest income fell slightly below expectations. They're having other headwinds, and just the whole industry as a whole They're trading down 2.8% this morning.
Well, poop.
Yeah.
We built up the financials as being such a bellwether industry as an expectation as to what the rest of the earnings season might look with. Suddenly, I'm glad I'm leaving town next week.
Yeah. Maybe some of the other things will come out. Some of the other names, I don't have details, but just kind of high point. We talked about BlackRock reported, they beat by about 94 cents a share, came in at like $8.93 a share. We had First Republic Bank, a regional bank, they beat on earnings. They had, let's see, I think there's one more bank in here that I don't have on my tip sheet. Bank of New York, they beat on expectations too. So most of them beat, but they all gave that headwind story for the rest of 2023.
And the result is that I don't see a single financial on my big winner list this morning. It's a mixed bag with no trend whatsoever. Resetting the table, it was an up day yesterday on Wall Street. In the case of a couple of the indexes, pretty doggone good, in fact. 45 minutes before we opened this morning was some interesting macro news and some not so good news from the earnings front. What are we looking at 45 minutes before trading begins?
Dave, I see a lot of red ink out there on my board. We got the Dow down about 0.75%, the S&P 500 down 0.9%, the NASDAQ 100 down 1%. So along with the Russell 2000 down about 0.7%. So all the stock indexes are heading in the red. We've got silver and gold, kind of a mixed bag this morning. Silver's been pretty volatile here lately, down 1%. Below $24 at $23.76 an ounce. Gold actually managed to push up over 1900 to 1902 an ounce. That's up about 0.2%. Crude oil, Dave, continuing to head the wrong direction, up 0.4% to $78.70 a barrel. And I think that's about where it was yesterday morning.
That was my reaction. I was going to say that looks like daytime wobbles because that was about where it was yesterday. Overseas markets, mixed bag on the Asian rim. The mainland China and Hong Kong markets, on the other hand, were up considerably. Europe is mixed this morning, looking at our futures and looking at our early reports. They've got a little bit of up in England, a little bit of down in Germany. It looks like they're trending toward the red ink side. Keeping tabs of what's happening with my retirement account, I don't need to because I got a plan. How do other people get a hold of you to find that plan for a retirement you can count on?
You know, Dave, we got a great opportunity for folks right now. We are getting ready to do some workshops. They can go to our website, statlerfinancial.com. There's a tab there where they can actually register. This is good for folks that are 5 years out from retirement and got an IRA, something like that, $150,000, $200,000 that they need to figure out income planning, tax planning, and risk management. Go to our website. You can register there. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And you'll be back on Monday morning with an update as to what's going on and what's likely to affect your money on Monday. Phillip, thank you so much. You have a good weekend, all right?
All right, buddy. You too. Take care.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, have a great weekend. I hope you'll join me back here next week, Monday morning, same time, same place. Until then, have a great weekend. Bye now.